This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled more than 2% lower on Friday as investors weighed a looming global supply glut, while also keeping an eye on a potential Ukraine peace deal ahead of talks this weekend between Ukrainian President Volodymyr Zelenskiy and U.S. President Donald Trump. Brent crude futures settled down $1.60 or 2.57% to $60.64 per barrel. U.S. West Texas Intermediate, WTI, crude settled down $1.61 or 2.76% to $56.74. While supply disruptions have helped oil prices rebound in recent sessions from their near 5-year low on December 16, they are on track for their steepest annual decline since 2020. Brent and WTI are down 19% and 21% respectively on the year, as rising crude output caused concerns of an oil glut heading into next year.
China has issued 19 million tons of export quotas for refined fuels including gasoline, diesel and jet fuel in the first batch of such allowances for 2026, free trade sources familiar with the matter said late on Wednesday. The world's second-largest consumer of oil also gave out 8 million tons of low-sulfur marine fuel export quotas in this batch, they said. Volumes for both were steady compared with a year earlier. China manages its refined fuel exports via a quota system to balance the supply-demand fundamentals in its local market.
Moving on to the top news in the energy sector.
Onshore fuel oil stockpiles in Singapore rose to a 2-week high, as both imports and exports rose from the previous week, data showed on Friday. Inventories gained 4.3% week-on-week to 25.72 million barrels, about 4.05 million metric tons, in the week to December 24, data from Enterprise Singapore showed. Fuel oil inflows into onshore storage increased 5.6% to about 804,000 tons, with Indonesia as the top origin for the week. Meanwhile, fuel oil outflows from Singapore tanks climbed 66.4% to about 510,000 tons, though most of these volumes were headed to neighboring storage hub Malaysia, a sign that regional supplies are still building.
The Russian government has extended a temporary ban on gasoline exports until February 28 for all exporters including producers, Interfax news agency reported on Saturday, citing the government press service. Russia also extended the ban on diesel exports, as well as marine fuel, until February 28, which will not apply to direct producers of oil products. Next, we have the top news in metal markets. Silver breached the $77 mark for the first time on Friday, while gold and platinum hit record highs, buoyed by expectations of U.S. Federal Reserve rate cuts and geopolitical tensions that fueled safe haven demand. Spot silver jumped 7.5% to $77.30 per ounce, as of 1:53 p.m. Eastern Time, 18:53 GMT, after touching an all-time high of $77.40 earlier today, marking a 167% year-to-date surge driven by supply deficits, its designation as a U.S. critical mineral, and strong investment inflows. Spot gold was up 1.2% at $4,531.41 per ounce, after hitting a record $4,549.71 earlier. U.S. gold futures for February delivery settled 1.1% higher at $4,552.70.
China on Friday said it will continue to regulate crude steel output and prohibit the addition of illegal new capacity from 2026 to 2030. In 2021, the world's largest steel producer and consumer put an end to growth in crude steel output as part of a plan to limit carbon emissions. The mandated output control also came as domestic steel consumption was hit by a protracted property market downturn, which left the industry plagued with overcapacity. In the first 11 months of 2025, China's crude steel output fell 4% from a year earlier, keeping the annual total on track to fall below 1 billion ton, the first time in 6 years.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade wheat futures tipped lower on Friday after Ukrainian President Volodymyr Zelenskiy said he will meet with U.S. President Donald Trump on Sunday for continuing talks on ending the war in Ukraine. Wheat futures had gained earlier in the week over worries about war escalation in the Black Sea export zone. CBOT corn and soybean futures chopped up and down and ended lower as thin trade caused volatile swings in the market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.